Hey friends, Lucian here with the Bullish Bears team. This video is going to be on the importance of setting up trading rules. If you now have the trading strategy that you want to get into, whether you want to be a day trader, a swing trader, you want to do options, it's important right off the bat to set some proper rules and guidelines before you start trading. And the reason for this is because emotions can really get the best of us when trading. So there's kind of the two sides of the coin when learning stock trading. You got to learn the technicals, right? And then there's also the emotions. So like any profession, you can put in the time or the energy to learn the technicals of any profession, but are you able to implement the real world experience? And that's where it's so key when trading or just in any type of job in general. So let's say you want to be a veterinarian, right? You can go to school to become a veterinarian, but are you going to be able to operate when it comes time on those animals, right? And that's where the emotions come into play. So you could know everything there is about being a veterinarian, but if you're not able to operate because your emotions it's too hard for you, that's where the trickiness comes into play, and that's how it kind of works with trading, right? You can learn all the technicals with trading, but are you able to place a trade? Are you able to get in and out? Are you able to think clearly and not let your emotions rule you when trading? That is the key to becoming a successful trader is learning how to overcome your emotions. And setting up proper trading rules will help you to kind of overcome your emotions, right? So you won't let your emotions trick you. You'll be able to trick your emotions by having those trading rules in place to avoid having to fall into that emotional trap. So it's you, right? It's you, whether you win or you lose when trading. It's not the stock you pick and what happens to it. You are in control of every trading decision that you make. So you'll hear a lot of people out there, whether they're traders or previous traders, or just talking about the topic of trading in general. You might hear things like trading is gambling or the stock market is out to get you. And the truth of the fact, or the fact of the matter is, it's not true. Sure, is anything gambling if you don't know what you're doing? Absolutely. Does the stock market seem like it's out to get you? Absolutely, it could seem like it's out to get you if you don't know what you're doing, right? So if you just kind of join trading and you're trading blind, you don't have a set of rules, you haven't studied, you're following some guru's stock tip, you don't know where to buy or to sell, of course it's going to feel like gambling. Of course it's going to feel like the stock market is out to get you. Believe it or not, though, it's not out to get you. The stock market is just a culmination of real buyers and sellers, real average people like you and myself, right? However, it is important to be aware that there are HFCs or high frequency computers. So there's real world traders as well as computers, right? So computers are something to be very aware of because most of trading is done by computers. That's not to be you don't need to be scared of them. You have to understand once you know how to kind of trade and put things together, the support, resistance, the patterns, the candlesticks, you can learn again those computers can't hide what they're doing from the stock charts. So whether it's just a regular person buying and selling or a computer buying and selling, you can't hide those clues from the charts. So once you see those clues on the charts, you know support, resistance, and patterns, then you can stick to a trading plan that fits you, right? Whether you're a day trader or a swing trader, you can look at those charts and those patterns, make educated trading decisions, and then if a trade goes against you, you can cut your losses and keep your risk management small. So let's talk about some important trading rules. This is not going to be like the technicals of your trading rules. Again, this is more going to be like just the concepts of how to kind of get a kind of a guide moving forward. But it's not going to be more of like a technical, like specific, whether you're doing day trading or swing trading or options. It's going to be more of the concepts of kind of getting prepared for when you're entering into the arena of those specific trading areas. So the first thing is patience. Patience is key when trading. So again, you want to have a plan before you enter and exit every single trade. Do not trade blindly. Look at support and resistance. Plan your entries ahead of time. plan your exits ahead of time. Don't plan your exits after you've entered into a trade, because that's where the emotions will come in and our emotions can trick us. So again, before you enter into every trade, make sure that you have your entries and exits planned out. Next up, never chase a stock. I can't stress this enough, whether it's a certain sector, whether it's Bitcoin or gold or a certain penny stock or a tip or somebody's pumping a stock. Again, there will always be another stock to trade. Don't chase one. If you miss your entry, don't run after it, because that's where a lot of new traders really blow up their accounts, is they buy at tops or peak levels or support levels, because the stock's pumped up and they're buying at the top of the hype or the top of their news, and then that's how stocks will fall a lot of times right afterwards, because they're chasing the hype. Again, there'll be trade rooms out there that they pump and dump to their other members. We do not do that in our community or in our trade rooms. But again, so we teach how to trade in our trade rooms. We do not pump and dump stocks. That's a huge difference with us between other companies, compared to other companies that are out there. So again, what will happen a lot of times is if you're late to the punch, if you're following some guru or some chat room service or wherever, if you miss your entry and the stock flies up and then you chase it, you buy at those top levels, and then when that guru or chat room or people dump the stock, it ends up falling, right? So that's where you got to be very careful with that. So that's number one if you're following hype or news or other gurus. But just in general, if you're just going on a hunch or a whim and you're not planning your entries and exits and looking at support and resistance, and you're trying to just hope that stock's going to go up, the problem is, again, we're always wrong. There's not always, but like, traders are wrong. Even the best traders in the world still fail 30 to 40% of the time, right? So you're not going to be right on every single trade. So the good news is that when happens, if the stock goes against you, just cut your losses immediately. Don't hold, don't chase the stock. Cut your losses. You want your winners to outrun your losses, right? Your gains to overcome your losses. And the way you do that is keep your losses small. And then when the trade goes against you, cut your losses immediately, but do not chase a. So again, you'll hear the concept of trading is like gambling. No, it isn't. It's not like gambling. However, it does feel like gambling, or it'll seem like gambling if you don't know what you're doing, right? So, don't just buy something because you hear somebody promoting it or somebody's giving you the latest stock tip. They're pumping some random penny stock, or you think just some sector's going to the moon. If the technicals do not confirm it, then don't go chasing it. Don't go throwing money up against the wall, because you could end up losing it. And that's what most traders do. They end up losing money because they're not sticking to rules. They're not learning the technicals. Again, this is the stuff we teach you in our community. We teach you the technicals on how to trade properly. But if you don't put in the time and the effort to learn the technicals, and you just kind of go out there and sling money, you can have beginner's luck, but it will eventually run out. Now, as we stress in our community, indicators are helpful, but remember, they're not foolproof. The most important, trading indicator that you can use is price action, candlesticks. But some indicators can be very helpful for confirmation. So kind of find a healthy in between. Don't go on indicator overload. If you really know what you're doing, there are some traders out there that have a lot of indicators, and that works great for their confirmation. But again, if you're a newer trader, a lot of times new traders throw up so many indicators on a chart, and they could be just analysis paralysis, and they can end up being confusing. So price action is still key. Learning support and resistance and trend lines, with that price action, that is what really helps you to kind of find your entries and exits when entering into a trade. So again, confirmation with indicators can be very helpful. Just don't go on indicator overload. So it's always important to follow your trading strategy. Don't go following other people's trading strategies unless it's going to be the trading strategy that is the best fit for you. We also don't encourage mirror trading and copying other people's trades. So again, learn from other traders, sure. So if you want to become a day trader, learn from other day traders, learn from day traders in our community. If you want to become a swing trader, learn from the swing traders in our community. Same thing with options. You want to learn options, learn from the other options, traders in our community. Do not just copy them. Again, we do trade alerts, so we do real-time alerts in our community. Don't copy our trades unless you know what you're doing, right? And we encourage using a paper trading account first anyway. So you can come into our community, you can follow our trade alerts, but practice them in a virtual account or a paper trading account until you feel comfortable trading with real money. So again, you want to find your strategy, the one that fits best for you. Just because someone, let's say in our trading community that you might like, they might be a swing trader, but you might be more of a day trader. Or someone might be a day trader and the better fit for you might be swing trading. That's okay. So again, in our community, we teach all different types of trading styles, but don't copy someone's strategy unless that is the right strategy for you. And again, don't just copy their strategy without practicing first in a paper account or a virtual account until you feel comfortable. So again, this is just more of a kind of a guide moving forward on kind of get yourself mentally prepared for when you go set up specific trading rules for your specific strategy. Again, I can't tell you which one is best for you because it's different for day trading compared to swing trading, but it's still essentially the same, right? You want to keep your losses small. You want to have your winners outrun your losers, right? So a good kind of gauge to go off of is that kind of 2-to-1 profit loss ratio. So if you're risking 10 cents, you want to have the ability to make 20 cents. Or if you're risking $1 on a trade, you want to have at least the ability to make $2. Ideally, you want to have a 3-to-4 profit or risk loss ratio. But again, at least a 2-to-1 risk reward ratio. So that kind of is very helpful. So when you're going along and planning out your trades, make sure that you have the ability to at least double the potential. Again, nothing is foolproof, but if you're risking, like I said, $1, make sure you have the ability to make at least $2 to the next resistance level and use that as a gauge when you're trading. So hopefully this video helped you, and we will see you in our community. Enjoy.